All right, mates, welcome back to the channel. We again are on the BitYard exchange here this afternoon. It's at 3 p.m. You can kind of see it here. We are at that 1600 level again. And why this is significant is Bitcoin has been battling with that 1600 level quite a bit in recent trading in recent weeks. Falling back to it here, moving back above, it's falling back to it again. When we got breakouts of 1600, you can go all the way back here. We failed at 1600 and we collapsed. This is potentially what could happen again right here with Ethereum. Because if you look at where we were at right now, you're going to see that we don't really have any support down here. Okay, the support is all the way down here at the 1360 channel. Okay, and so that's important for you to understand that if it is to break this 1580 channel, which is really the bottom of this area where we fell back on August 2nd, then it doesn't have anything. It has this entire gap down here to fill, really. And that will not, that'll invalidate really a lot of all the optimism that's been, bannered about here this last week for Ethereum. Some of this may also be a precursor to the next week where everyone expects it to be a pretty volatile week in crypto. But you've got the top end up here at 1700, and then you're right here now, right at 1600. You actually broke 1600 now at 1596. So your options are really to sit tight here, wait for a break here, and then do a sell down. You also could actually use the straddle method, which I'll teach in a leverage course. For those of you who aren't familiar with that, you take the leverage course, and it's a pretty easy thing to understand. It's actually a very conservative approach to crypto. A lot, when you look at it in that regard, on how you trade that method. But here, again, let's take a look at the stick we're in. Again, it's 3 o'clock, just after 3 o'clock Eastern Standard Time in the U.S., and we are sitting at roughly a 7-day moving average of 1629, 21-day moving average of 1630, and a 30-day of 1651, all of which have been broken, okay? There's nothing positive and bullish about this pattern right now for Ethereum. Look at these sequential candles here. 1, 2, 3, 4, 5, 6. That's a day. That's 24 hours. Ethereum has been red. Okay, so until we get a green candlestick on at least the 1 hour, there's not really much that you want to do in terms of trading at this point to the bullish side. So you definitely want to use a sell down. Now, if you're already long in this, or maybe you have in your bag significant amounts of Ethereum, you could certainly buy a sell down as a hedge to protect that investment. And that's a common practice that has been working effectively this summer without people having to sell any of their stacks. Just keep shorting and taking the profits and then buying more tokens to fill your bag. And then you lower your overall cost basis of your tokens overall. Those people that have been doing that effectively are accumulating a bag at a more reasonable value than when the market was 6 months ago. And there's no undeniably that. You still have to have confidence and faith in the market going forward, but that's how people got from 17 to 18 to then 2020, then in 2020 for COVID, and in April, the crash of Bitcoin, the collapse of crypto for the most part, okay? People buying down at that levels, then buying again at the next dip of the stage, and then buying again this summer. They were accumulating tokens at which I think will end up being a tremendous value 2 years from now when Bitcoin halves again. So that's how you want to look at it, and you have to look at it. But with Ethereum here, even though we've got the merge and we got all that stuff coming, in September, that it may be already baked in, okay? And so any hiccup that you're going to get in the markets, Bitcoin's trading off 4% at 22,500.